Good evening, friends. This post-market report for Feb 15, 2022 is powered by 5paisa.com. Before we start, those of you who want real-time market insights from us, our top quality research, our flagship products, need to open brokerage accounts through our links under this video, transfer funds, and then send the screenshot to 98710 66337. And today would indicate how useful it is to have uh, some sort of hand holding, because the markets went down 500 points yesterday on the Nifty. They came back 500 points today. And this is the kind of volatility we are dealing with. What needs to be understood is that our markets are highly leveraged, and most markets these days, derivatives have taken a very, pivotal role. And once people start to cover shorts, you get extraordinary moves on the upside. And once people start cutting their long positions, you tend to get collapses. Plus, there is machine trading, artificial intelligence, all kinds of computer programs which are doing trading. So, unless you can act and think like a computer program, you don't have a chance in these kind of markets. Has today changed anything? Now, some reports we are getting from Russia, etc., is that some troops are pulling back. Some people say that a lot of troops are pulling back, and there is some agreement. I don't know. What I know is that all of this Russia Ukraine issue is a sideshow. The market went down because of this, the market went up because of this. But finally, the bigger issues of inflation, growth, and for us, FII selling, which continued today. Although DIIs bought for about 4,400 crores, FII still sold for 2,000 plus crores. So, that will not change. What we can say is, just for the day, 16,800 has been saved. Now, because of this, can we go to 17,600? Surely we can. But uh, let's talk about what our trade plan is for tomorrow before we get on with this. So S&P 500, as you can see this chart, it has opened, and it is opened according to expectation about 350 points higher on the Dow, and S&P is about 50 odd points higher, and that has led the Nifty to be at 17,340. But like I said, any sort of continuation on this news may not be very uh, possible. So we have to look at tomorrow as a fresh day. So S&P also looks like it is going to be in this range of about 4350 to about 4600. But again, this is not a sustainable news to take the markets up. Now let's see what our Nifty did and what we did, because that will add a bit of learning component to these videos. So what happened here was that we opened a gap up on the Nifty, came down, and all of a sudden we started to reverse about 11 o'clock. At that time, there was no news of what Russia is doing, etc. but it was clear that something is beginning to happen. So if you drew a trend line here from yesterday, it was quite clear that the market was breaking this trend line and was building higher support. So I was short going into the morning, but I was clear that I would not hold that short position beyond 17,000. So as soon as 17,000 was crossed, I assumed something is changing. I cut my short positions and went hammer and tongs on the long side. And by the time I think it was 2:30, we captured this entire move from about 17,000 to about 17,260, and this gave us a lot of profit plus covered our losses. So this is the machine. Once you start getting these consecutive green bars, you know you should know the machine is acting, and then the machine does not look for any support or resistance. So for tomorrow, what I would expect is that the market cannot be in this kind of volatility, which is 500 points up and down. This volatility needs to come down before we get the next sustainable trend. So the easy money is being done in the last couple of days. Even if I have to trade tomorrow, I would reduce my volume sharply, possibly trade with only a 50% type of volume and try to look for dips to get back into the market. So basically, this is the 10 and 20 uh, EMAs that I have on the chart. This is the 5-minute chart. What you want to do is try to buy any decline below this 20 EMA. Keep small stops because chances are that the market will be very highly volatile, and even if you put a large stop, it will get taken out. Also, the interesting thing on the Bank Nifty is that Bank Nifty fell, I think, about 1600 points from the highs, which was day before, and recovered a lot of ground. So again, on Bank Nifty, I would think that we are now ranging between this 36,800 and maybe you could say even to about 38,700. So 2000 point range on Bank Nifty. If the Bank Nifty is making 12 to 1400 point moves a day, you at least need to go with a uh, 2000 point range. Has anything changed? We have a high degree of volatility, but I am not sure I would say that something has changed or you have entered some great uptrend or you should expect great amounts of follow through. The idea is that whenever you get declines like yesterday, you build into quality stocks in all sectors. This will be the sort of year where you will get large bad days, and at the end of those bad days, you should put in some money as long term investment. As a trader, you know, you have to go with momentum, but as an investor, you have to slowly build up your position each time you get a decline. We would come back with a pre-market video tomorrow morning, because tomorrow morning the situation could be very different than it is right now. Plus, we'll come up with some fresh calls. So, till then, I would wish you well. Have a good night. And this was a presentation which was brought to you by 5paisa.com. Have a good trading day tomorrow.